Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto, where we show you everything going on in the cryptocurrency markets. We're not only going to be talking about the price of Bitcoin and the major drop that we've seen over the last couple of days, over the weekend, we're going to be talking about how the bulls are fighting to hold support at $36,000, and we're going to be talking about a whole lot more. We're going to be looking at Bitcoin in comparison to something called the M1 money supply, and there's an argument to be made that even when Bitcoin hit $69,000, it was still undervalued as compared to when it hit $20,000 in December of 2017. Sounds interesting? I guarantee you it is. A lot of very interesting inflation metrics we're going to look at today, as well as quite a bit of news. We're going to be talking about how the Russian director of finance has talked about how instead of banning crypto, they might be thinking about putting regulations on it. So a lot of interesting news coming out of Russia that's been impacting our markets as well. And just on a personal note, I'm feeling much better. I had a tickle in the back of my throat. It was very hard to talk when I woke up yesterday, and I didn't want to get anybody sick in the office. I feel great now, though, so I very much appreciate all of your support in that. You guys sent out some prayers. You guys tweeted me. Thank you so very much. I do feel better now. But we're going to go ahead and jump into the show. I am joined, as always, by TA Tim himself. How you doing, man?
What's up, everybody? I am here. I am present. It's a good day. I just want to say, how about that that RSI bullish divergence that played out yesterday?
Yeah.
It's almost like someone called it.
Ooh, okay. Let's go, Tim. Well, we're also joined, as always, by Smay. How are you doing, Smay?
I would like to note for the jury that I've heard somebody in this room say before that we don't predict anything here. The TA predicts. So I would like to say that Tim did not predict anything. The TA predicted it. So I just want to put that out there.
I just want
to put that out there. I'd also love to shout out some of the people in the chat today. We have TZ in the chat. I love
What's up,
TZ.
Ted?
Crypto Couple, Crypto Sec Guy. We got Grand Roofing Inc., one of our newest members.
Oh,
Crypto
welcome.
Alchemist. Let's see who else we got here. We got JoJo. We got Matt C. Let's see. We got Elliot Locke, Adam Rourke, Tom Wilkes. Oh my gosh, so
Brad
many.
Geidel, Agent Gold.
So many. I love you guys so much.
Our members.
You guys are so awesome. You guys are so. You're even cute.
Oh,
you're little cuties.
Smay, you're kind of cute, buddy. With those glasses, you look like
you.
Steve Jobs right now, and Steve Jobs is an attractive man. It's true.
Jobs. I feel like I look nothing like Steve Jobs.
I don't know. Well, it's the glasses. It's the glasses and the shirt. But we're also joined, as always, by Kelly. How are you doing, Kelly?
I'm doing excellent. I'm just so excited to see that the bulls are fighting for this 36K level. I know we're going to get into it deep today with a lot of the technical analysis. So we've got some great news stories coming up. We're going to be a little light on the on-chain stuff today, just because there's so much going on around the entire ecosystem, especially with everything that's coming up this week with the Fed meeting and then, the quarterly reports as well as all the news stories. But it looks like right now the bulls are holding fast and the bears look like they might be taking a little bit of a nap. So let's see. Let's jump into it and see what we got for this week.
Well, guys, it's your favorite show in crypto. This is the show where we bring you all of the technical analysis. We talk about the news. We mention the on-chain, and we let you know how to think, not what to think. Drop a 1 in chat for the Dream Stream team being back. I'm very excited to be here, and I am looking forward to jumping into this team. We're back, and the bulls might be also. Let me go ahead and tease you a couple of the stories we're going to be looking at today. Bitcoin whales are aggressively buying. There's a couple of whales that are dollar cost averaging instead of every Friday, every single hour, and they've gone from $0 to over $1 billion in Bitcoin purchased, and that is a very, very interesting thing. We're going to talk about what implications that might have and the market sentiment ramifications from that. We're also going to be talking about how long-term holders are holding strong, and about 60% now of Bitcoin that has been held for longer than a year. So that means that a lot of the supply in Bitcoin has become something known as illiquid. We're going to talk about that. We're also going to talk about how the Russian director of financial policy has come out in support of crypto regulation instead of a full-on ban, but we're going to get up to all of that here in just a second. If you're looking forward to today's show, drop a 1 in chat for the Stream Dream team being back, and drop a like on this video if you're looking forward to all of that content. We got a lot to cover today, and we don't have a lot of time to do it. About an hour and a half, but we always try and cram like 10 hours of content into one tiny little show so that we're being efficient with your time. So let's go ahead and jump into it. We're going to start over here on CoinGecko because CoinGecko actually allows me to rank the top 100 by biggest gainers and losers. We can see that Bitcoin over the last hour is up 1.3%. It's actually up 8.4% compared to where it was 24 hours ago. You guys will remember that there was a major drop that started well, it started back last week, but it really exacerbated itself a couple of days ago. We pushed all the way down to $33,000. It was definitely a capitulation event. I made a video about, how we should look at this market, the sentiment that we should approach this with. If you'd like to go back on the channel and watch that, I think that video was very helpful for some people. We got a lot of positive feedback on that. So that'd be a video that if you haven't seen, please go and watch. But ever since then, Bitcoin has bounced and gone into a little bit of a flag. So Bitcoin is recovering, but let's take a look at the rest of the altcoins. Ethereum sitting at $2,400. Guys, $2,400 sounds like a big drop drop because Ethereum approached, $5,000. It almost got there. But you have to remember, I remember buying Ethereum at $140 less than 2 years ago. So the fact that we're sitting 15 times $140 or 13 times, whatever it is absolutely remarkable. Ethereum has had a very strong 2 years, and so has Bitcoin, and the overall trend is positive. Just remember, when in doubt, zoom out, because the trend is up and to the right if you look at it from a bird's eye point of view over the course of years. Bitcoin and Ethereum both up 8 and 9% respectively over the last 24 hours. Cardano sitting down at $1.04. It dropped down to about 95 cents. I watched that yesterday. If I hadn't have already bought so much Cardano, I would have bought more. I'm actually going to make a video later about one of my biggest regrets in this cryptocurrency drop, and so stay tuned for that, because I should be making that video today. As far as the biggest gainers and losers, Pocket Network is up 40% right now, and Fantom up 22%. We're actually going to be looking at Atom, Fantom, and maybe even Cardano. We're not going to guarantee you Cardano. If we have time, we're going to look at it also. But we're going to look at Cosmos and Fantom. I actually had the pleasure of interviewing the CEO of Fantom. His name is Michael Kong. Very, very humble guy. And I look at the leadership for a project to see if it's a project that I want to invest in. Hands up, I've never bought a single coin of Fantom in my entire life, but I'm thinking about doing it because I have so much respect for the man that created it. Now, as far as the biggest losers, we got Leo token, BitCub coin, and then the stable coin. So pretty much everything's up over the last 24 hours. Been actually a pretty bullish 24 hours. That's normally what happens when you see a major correction like this. You'll see the market slowly start to recover. And that's what we're seeing right now. We're seeing a bit of a corrective rally. The question now is, can we maintain that and push all the way back to where we were before this whole thing started? Now, let's go ahead and do a little bit of altcoin technical analysis. We've had some people asking about Atom, which is a cryptocurrency that I can show you over here on CoinMarketCap. Let's type in Atom. It's named Cosmos. Atom is the ticker symbol. Ranked number 17 on CoinMarketCap. Got about a $10 billion market capitalization. If we look at the entire history, you can see that it's had a very bullish 2021. Moved all the way up to an all-time high of $43. As far as its price action is concerned right now, though, let's go out to the daily chart and do a little bit of analysis on it. We can look at the last couple of years of this market, or the last year of this market, and we will see that is generally in a major uptrend right now. We have a flat level of resistance sitting up here at $45, so you could make the argument that it's sitting here in an ascending triangle pattern, and that may cause it to break to the upside in the future. One thing I'll point out here is that if it were to correct all the way down to its support level, it would correct down to about $26. Now, I want to take a look at some of the oscillators because oftentimes they give us some very powerful insight. You can see that the RSI corrected recently down to about 41. That means that the RSI has not corrected super far. It means that this drop might not be the bottom, but it does seem like it is recovering a little bit with the rest of the cryptocurrency market. You can also see it is bouncing and starting to recover on MACD. And if we take a look at the Bollinger Bands, you're going to see that we should have bottomed out pretty close to the bottom right here. I don't even have them up yet, but that's what I thought. The Bollinger Bands, I hadn't even pre-looked at the Bollinger Bands, but I could just tell, yeah, we probably bounced below those Bollinger Bands right there, and that's exactly what we did. We bounced back up into it. Now we're testing the 20 daily simple moving average. The question you have to ask yourself here on Atom is this market going to be able to break through this moving average, and how correlated is it with Bitcoin? Just looking at it, it looks like it's actually relatively uncorrelated with Bitcoin. It did not hit an all-time high at the same time Bitcoin did. It's actually hit an all-time high more recently here in the month of January. Very interesting project. I'm going to save the fundamentals for another show, but as far as the technicals are concerned, you can see a little bit more of a drop, but honestly, I think you may see some recovery here because it has fared pretty well even while Bitcoin has been going. It almost looks like a hedge against Bitcoin. You can see how it has been doing pretty well even as Bitcoin has not. But now I also want to take a look at Fantom. And then we're going to check in with the chat here in just a second and see if you guys have any super chats or anything. We're going to make sure we read those. But I want to look at Fantom really quickly, and I also want to say a few things on Fantom. Like I said, Fantom is a project that I really have a lot of respect for, mainly because I now met and I now know the founder of the project. This project went from about 3,000 daily transactions on January 17th of 2021 to over 1.1 million daily transactions as of January 17th this year. Last year, January 17th, it had about 5,000 active addresses. January 17th of this year, it had 1.7 million. So it has gone absolutely parabolic in the last 12 months. And Kelly was actually telling me earlier that it has briefly been surpassing some of the bigger layer ones as far as total value locked. Kelly, can you tell us a little bit about that before I go and do the TA on it?
Yeah, absolutely. I'll actually pull it up right here on DeFi Llama for those of you, for those of you that don't know. DeFi Llama is an incredible website you can go to, and you can check on all these different things. And in this case, you go to chains, and as you see here, Fantom has surpassed Avalanche and Solana. Yesterday, it briefly actually passed the Binance Smart Chain as well. But one of the things I want to point out here, when you are looking at these different projects and you're trying to figure out how to build your portfolio and get different projects that support each other, in this case, if you go to Fantom, you just click on Fantom, and you can see all the different projects that are basically that are operating on top of the Fantom protocol. And you can go through this and you can find different projects that have worked in similar ways on other projects like Ethereum, all the different layer twos, different scaling solutions, different operability utilities. You can use DeFi Llama to do that, but it's really incredible to see here that Fantom, I think the beginning of last year, Fantom wasn't even on this top one. I mean, it was so far down, and now it's way up here. And this is also something we'll be watching for Cardano, as Cardano has all these things popping off now with all their dApps. They're very low on this list because they haven't had any operability on top of their chain. So it's really nice to see Fantom making such strides as it has, and I think it's got plenty of room to go this year and indefinitely into the future.
Yeah, it's got some great tech. Also, obviously, we don't have time to go into all of the tech, and I'm not a blockchain developer, so I'm not the best person to comment on it anyway. But we actually do have an interview with Michael Kong, like I said, founder of the Fantom Foundation. He is the CEO of the Fantom Foundation, and he talked a lot about what makes Fantom successful, their thoughts on leadership, and the things that he's learned from his many years working with Fantom. But as far as the price, is concerned, let's go ahead and take a look at this. Obviously, it has had a drop over the last couple of days, as Bitcoin has. It peaked out here at a local high of about $3.40, which is basically an all-time high. And we've actually seen quite a bit of bearish RSI and bearish MACD divergence come in here that has now played out. It dropped all the way down to a longer-term uptrending level of support that we can trace all the way back to December 31st of 2020. We can push it all the way up here, and that's where we touched. And by the way, this bottom back over here was when it was trading at 1.7 cents. Now that bottom is $2. So it has rallied 2,000% in the span of just a year. And by the way, it earned that. If you want to find more analysis on why Fantom is a project that is doing very well, I encourage you to go to a website called FTMscan.com. That is where you can find all of the on-chain metrics for Fantom, and they are remarkably encouraging. They're all just like flat, 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 boom, it just exploded. This project came out of nowhere. Like Kelly said, it wasn't even in the top 100 a year ago, but now it's doing very, very well. As far as the price is concerned, though, we've talked a little bit about the fundamentals with how much Fantom is growing and how much I think that Bitcoin's going to have a small bounce or sideways action. I don't necessarily think we're going to see a massive drop again just yet. We might in a few days, but as far as the next day or two, I think we're probably going to hold out around here. During that time, I think we will see a small recovery on Fantom. And also, if you're looking for something to invest in, I think Fantom is one of the best layer ones to invest in right now. The last year has shown that, so it's definitely something I'm going to be looking to scoop up. Now, I'm going to talk about Cardano, but I'm going to talk about it briefly because I want to keep us moving here. Cardano recently rallied all the way up to $1.64. It was doing very well, and then Bitcoin jumped off a cliff, and Cardano followed it. Cardano just recently pushed all the way down to 92 cents, dropped some wicks down there. But the main point I want to make to you on Cardano is look at how long these lower wicks are. Look at how long these lower shadows are. Cardano dropped down to 92 cents, boom, instantly bought back up. Dropped down to 95 cents, boom, bought up. Dropped down to 99 cents this morning, boom, it got bought up. Everybody's buying the freaking dip. Nobody wants to see it go below a dollar. Even here on the hourly chart, we only managed to stay below $1 for less than an hour. You have to go down to like the 15-minute chart to even see that drop. We fell down there and then massive amount of bullish buying. So you might argue that there's a capitulation that needs to come into Cardano that it hasn't seen yet, where it drops and then it just kind of sits down there. It might need that, but to be honest with you, I'm actually very encouraged by the way that this chart looks, because it means to me that the bears are trying to push it to the downside, and there is FUD in this market, but the retail and the hashtag ADA gang are coming in clutch and saying, nope, actually we're going to buy the dip. And to be honest with you, if I had more cash on the side, I would buy the dip. Like I said, I'm going to be making a video about one of the regrets I have of this correction, and hint, hint, it's that I didn't have enough money on the sideline to go ahead and put into crypto, because I'm already so exposed to crypto. So I'm going to talk about that in a video in the future, probably today or tomorrow. But anyway, guys, let's go ahead and check in with the chat. I want to see what you guys are thinking about this entire scenario, and let's read some super chats if we have any of them.
We have one super chat, and then we can go to chat. I think we have one on here that looks pretty interesting. But Robert Corey said, opinion on Solana. I'm looking at my DCA, my initial purchase price of $200. Thanks, Robert.
Yeah, so I think Solana is a good project. Look, Solana has a lot of institutional backing. When it launched, there were so many power players on the side of Solana. In fact, while I was in Miami at the North American Bitcoin Conference, I heard a lot about Solana. A lot of people were talking about it. It's a name in the industry that's almost like You know, Bitcoin's very homegrown. Solana had a lot of support from the institutions, had a lot of support from big money players, and it is a solid project that has a strong blockchain. My concern with Solana is, one, its tech, and two, the perception of its tech. So I heard a lot of jokes while I was down in Miami of like, oh, Solana breaks every 2 hours, or oh, Solana gets hacked every 2 hours, or something like that. And that's not true, obviously, but there have been issues that lead people to have shaken confidence in the blockchain. And also, I do have my concerns about centralization with the way the tokens were, or with the way the coins were initially distributed. So I think it's a project that's going to do well, but in the same way I have concerns about Crypto.com and the fact that it's very centralized in its brand, I do have my concerns about Solana. So I'm not saying it's a bad project to invest in, but I want us to remember one of the core tenets of Bitcoin and cryptocurrency is this idea of decentralization, and any project that sacrifices decentralization for the sake of speed or transaction throughput or block size or functionality really misses the point, because the fact is a centralized solution to anything that blockchain is doing will always, hear me here, always be more efficient than a decentralized solution. The reason we make it decentralized is so that nobody can have financial sovereignty over you. You see how that works? I don't want a Solana or a central bank or anybody to have financial sovereignty over you. It's our mission, it's our vision statement for you to have financial sovereignty over your money rather than the other way around. So any project that sacrifices decentralization for users or speed or anything like that, I'm talking about a cryptocurrency project, that has me concerned. I'm not saying don't invest in it, but personally that would be my concern with that.
Gotcha. We had one that just came in here from, I'm trying to scroll because the chat is being weird. There we go. Albert Sanchez Alvarez saying, is SDSU now accepts Bitcoin for donations? You probably still don't know who the Aztecs are, but will you now know that they're accepting Bitcoin? It's SDSU. At first, I was like,
South Dakota?
That's what I'm saying. It's
No,
South Dakota
it's-
State.
San Diego State University?
Well, he says the Aztecs. So San Diego State University, not South Dakota. It will be San Diego. Is he talking about the college? Like,
Yeah,
the
I remember
Aztecs.
seeing
They
a
are
news
the Aztecs.
story. Yeah, I remember seeing a news story about I don't know, maybe two or 3 weeks ago, that they're now accepting crypto Bitcoin donations.
That's pretty cool.
And I think what they're using them for specifically, though, is to raise funds for crypto related projects and courses within. I may be wrong, but I mean, it's incredible when any major institution or any major corporation, accepts the Bitcoin. It's just one more domino in the long line of dominoes that will eventually fall globally in all different spaces and businesses.
Yeah, absolutely. Yeah, Matt C even just said, yes, San Diego State. And by the way, I see some hashtag FinSolves in chat. Can we get a bunch of hashtag FinSolves? Let's hear it for financial sovereignty, guys. That's what we're about here. We want you to have control over your finances rather than your finances controlling you. That's what financial sovereignty means to me. What does it mean to you? I'd love to hear that. Make sure you smash that like button. We're about to jump into some Bitcoin, but really quickly, I want to bring you a word from our sponsor, which is iTrust Capital. Do you have a retirement account, an IRA, and you've been wanting to invest in cryptocurrency with it? iTrust Capital has that solution for you. And if you don't know what a retirement account is and why an IRA investing with it in Bitcoin would be so beneficial, here's why. It allows you to change the way that you pay taxes, and you can defer those taxes so that you pay those taxes later, or you can pay taxes now and a little bit later. So there's a lot of different tax advantages to investing with an IRA. It is basically a tax bubble where the way that you invest is changed and the reporting structure is much more advantageous to you. iTrust Capital is the biggest in the ecosystem as far as being able to invest in Bitcoin and cryptocurrencies. They've got about 15 to 17 different cryptocurrencies that you can invest in within your IRA. So if you have an IRA and you've been wanting to invest in Bitcoin with it and take advantage of those tax benefits, of which there are many, then you should definitely check out iTrust Capital. The link is in the description box down below. They're very easy to use. They've got over 100,000 reviews across everything. They've got amazing 5-star Google reviews. Make sure to check them out. You won't regret it. They've also got a very simple and a very, very inexpensive fee structure, so make sure to check that out as well. Anyway, though, we're going to go ahead and jump into Bitcoin. Smash that like button if you were liking today's stream. Let's get up to 750 likes here in the next couple of minutes, and we're going to go ahead and take a look at Bitcoin. Dun, dun, dun. Guys, Bitcoin did have a drop the other day, and I don't want to make light of this. I know that this was very painful for a lot of people. I get that. I want to meet you guys where you are and let you know, hey, I understand being scared of the Bitcoin drop. I remember when I got into Bitcoin back in 2017. I'll just open on a little bit of a personal note here so you guys kind of see where I'm coming from. When I got into cryptocurrency, I remember watching it. It was right here. I'll go ahead and draw a vertical line where I was, the day I got into crypto. I got into crypto right here on July 31st, 2017. The first thing I knew when I got into crypto was a run that was 80% in 30 days. And then from there, Bitcoin would drop all the way down to $3,000. During this time, I was actually, I live in Florida and Hurricane Irma was coming through, so I actually didn't have internet or electricity for half of this time. So I was kind of freaking out. I'm like, oh my gosh, is Bitcoin gonna die? Oh my gosh, Bitcoin's going down. It's down 20%. I haven't seen it in a week. What's going on? And so I got really scared, because I was like, okay, I just found this Bitcoin thing. It's got so much opportunity and now it's dropping. And so I just want you to know that I understand it being painful and scary whenever Bitcoin goes through a correction. So I want you to know whenever I don't look scared, it's not because I don't understand. It's just because I've been through this a lot. And I want to help you guys to have confidence in this market as well. So I'm genuine when I tell you guys I'm not scared of this drop. I'm okay with this drop. Obviously, it's uncomfortable, but I've been through this a lot. I also remember that I started the YouTube channel right. Let me just draw a vertical line the day the YouTube channel started. This was the day the YouTube channel started. You can see I wasn't in crypto long before we started the YouTube channel. Started the YouTube channel. A month later, we went through a 70% correction down to $6,000. That freaked me out too because I started this YouTube channel. I'm like, boom, I'm going to go out there and I'm going to do something big. I'm going to help people learn crypto. I'm going to learn crypto myself and I'm going to, I'm going to make a change in my life and in people's lives. And then Bitcoin went through a bear market for the first year that I was running the channel and it was very discouraging. And, the fact is, I was hardened through that. Not in a bad way, but in a good way. I was strengthened, maybe is the better way to say that. I was strengthened through that time during that bear market because it was painful. I would see Bitcoin drop and then, oh, it rallied. Okay, we're going back into a bull market. Nope. Okay, we're going back into a button. No. Okay, look, we're going into a bull. No. And you know what it taught me? It taught me patience. And that's, there's a phrase that I've been telling myself for the last couple of weeks and that I think has become kind of part of my own personal lexicon. That is, patience tested is patience built. You have to have your patience tested if you want to build your patience. So I just encourage you, whenever Bitcoin is going through a drop like this, understand the price is downstream of the fundamentals. And also remember that your patience being tested is actually the way that your patience is going to be built. As much as it sucked that this first year that I was in crypto was a major bear market, I actually wouldn't trade it for anything because the lessons I learned during this time have stuck with me. And now it gives me a fortitude that whenever a drop happens like this, I know, okay, I've been here before. I've gotten through this. I'm going to be okay. So that's what I would encourage you guys to do. I understand it's scary right now. I really do. I've been there. I've walked through this market the exact same way you have, but I just wanted to encourage you in that. But with that said, let's go ahead and take a look here at the technicals and get away from all the mushy stuff. I know some of you guys aren't the biggest fan of that, but that's okay. Anyway, let's go ahead and take a look here at Bitcoin. The first thing I want to point out is this ultra long-term trend that Bitcoin has been maintaining and the fact that Bitcoin did just break it. So I just told you, hey, don't be scared, be confident, we're going to be okay, but now I'm here to give you a little bit of bearish news. So there is this long-term trend right here that has been in play ever since May 31st of 2011. We actually bounced around it here and we actually used this support and resistance here in 2014 and 15. We tested this support here, fell below it here, used it as support and resistance here, and we broke through it there. If we zoom in, you can see that it was giving us support over the last couple of weeks, going back to about January the 7th. We actually broke bearish through it over the weekend. I believe on Friday is when we actually finally broke through it. And, that is concerning a lot of people because this long-term uptrend, whenever we fall below it, a lot of times we actually stay below it for quite some time, whether it be 3 months, 6 months, a year. I would encourage you to understand, though, that this is a linear, well, this is an exponential trend because it's on a log chart, but also Bitcoin is growing exponentially as far as the price is concerned. Could we see Bitcoin stay below this uptrend for a multitude of months? Absolutely. Could we see Bitcoin go sideways here for a couple of months? Absolutely. Could we see a relatively boring Q1? Absolutely. I want to set that foundation because I don't want us to have invalid or incorrect perceptions of what the market is doing. But I did just want to bring that to your attention. We have had a pretty major capitulation event also below this uptrending level of support. We had this idea that, okay, maybe this ascending triangle pattern was going to hold and we were going to break to the upside and we were going to hold here at 42,000. That has not taken place. We have actually dropped to the downside. And that's okay. That is not something we should be scared of. That is something that we should be aware of, but it's not something that we should be fearful over because remember, emotions are almost never your friend when you're trading in cryptocurrency. If you watch the video I made a couple days ago, you'll know trading and investing is a logical decision, and when you get your emotions involved, that's when it gets complicated. Now, as far as the technical analysis is concerned, First thing I want to show you is that the MACD is moving to the upside, but it is converging on itself, excuse me, but it is pushing to the downside. That movement to the downside is actually a little bit annoying because we do have this bullish MACD divergence right here, and if we do set a lower low on MACD, then that actually invalidates that bullish MACD divergence. So I very much want to see MACD hold that uptrend right there and then be able to continue up just like that. I also want to remind you about the RSI. We talked about on Friday, I believe it was, how RSI pushed all the way down to 20. That's actually the lowest level that RSI has been ever since March of last year. Excuse me, I'm sorry, March of 2020. And the fact that that has happened indicates that we have seen a pretty big drop and that we're probably going to see a little bit of a bounce. Now, on the kind of bad news side, I do just want to remind you that, yes, we have seen a pretty major rally here from 33,000 all the way up to 37,500, but we started at 43,000. So we had this massive drop, which was mainly a giant short squeeze. Long squeeze, I'm sorry. And then now we've seen a bit of a rally, but we have not recovered anywhere near where we began. I'm going to show you some other technicals, but really quickly, I want to throw it to Tim. Tim, what do you think? And I'm sure you talked about this yesterday on the show. What do you think about this size of this bounce? Is this bounce large enough for us to be encouraged? Or is this bounce so small that we should really take that as a sign that the bears might still be in charge?
Well, so this is a bounce that kind of put us in a zone of neither the Bulls nor the Bears being in charge of the next little bit. And I think it's in anticipation of the Fed news coming out here. The meeting starts today. It'll carry through to tomorrow. And I believe Kelly was telling me that the announcement's actually coming out tomorrow night around 7, Kelly, I think that's what you said. I have no idea what exact time it's coming out. But I know that's me. I know they're meeting today and tomorrow, and they should be having a report tomorrow. If for some reason that doesn't happen, then I definitely would be looking for it definitely by Thursday. Yeah. All that's coming out, as well as all the quarter 4 earning reports are coming out throughout this entire week and early next week. So there's a lot of stuff on the docket in terms of whether it's going to hold, suppress, or support market movement here throughout this entire week. So everything's kind of sitting there, riding on the line either direction. So you really got to play it safe and careful right now because things are quite choppy. Yeah, so okay, so I take back. I don't know what time they're announcing it, but tomorrow night is when I think they announce what the decision of that meeting was. And here's what we see right at the moment is, and I called this back a little bit ago when we dropped and everyone was freaking out. I noticed on the hourly chart back on January 22nd, I was like, okay, we're setting up hourly bullish divergence. That's not going to save us from a massive dip. And I even predicted, I said, hey, this isn't the bottom. What's going to happen is we're going to see a nice little false rally from the hourly. What it's going to do is then change the 4-hourly chart to set up for bullish RSI divergence. So sure enough, if you look at the 4-hourly chart, you see that rally that peaked on 23rd around 3 o'clock in the morning. Yeah. That set up the beginning of, it actually didn't peak there. It peaked, around 1500. That peaked to set up, to come back down, set the price even lower, to set up bullish RSI divergence on the 4-hourly chart. Now, here's what I'm looking at right now as I'm moving forward. We had bearish RSI divergence on the hourly chart to kind of halt us, to kind of say, all right, let's slow down, let's stop going. But what we're not seeing anything happen is on the 4-hourly chart in terms of right now, we are not sitting we were playing out bullish RSI divergence, but we're not setting up bearish, which is what I said is the next thing to look for. And the reason why I think we're going to set it is the RSI back here, if you're looking at that peak that we had on the 20th around 7 o'clock, that peak is not that high on the RSI. It's not that much higher than what we're at right now, but that price obviously being close to 40, it's 43,300 almost. I just don't think that this rally is going to get us back there. So I do expect us to set up bearish RSI divergence on the 4-hourly chart, bringing us back down. But that's all setting up, I think, when we're finally going to see this relief rally come and setting up the bullish. And I'm not just talking about regular, because just so you guys know, there's 4 different kinds of bullish or bearish RSI divergence. They're strong. That's the one that you really want to see to reverse the trend. There's also weak, and that reverses trends, but it doesn't usually come with a lot of oomph. We really want the strong bullish RSI divergence. Then you move over to continuation patterns, and we have our medium bullish divergence, and we have our hidden bullish divergence. What I'm seeing right now is none of them playing out. The last thing that played was a strong bullish RSI divergence on the 4-hourly chart, but what I would really love to see is that form on the daily chart, and the price has not gone high enough, and the RSI has not gone high enough on the 4-hourly chart to get us to a position where we can set that up. So I think, even if you're looking at the hourly chart and the Bollinger Bands, look at how constricted they are right now. I think that we have some sideways boring action here between 37,000 and call it 35.5. In anticipation of what that news actually is. Because when you think about it, we are only about 20 candles away from finding out, 24 to 20, 30 candles away from finding out on the hourly chart.
Right.
From finding out what that news is. I think that we're in look back not that long ago, we were in very constricted sideways movement for many, many candles on the hourly chart. I think we're going to see a similar thing happen again. And then, today, just so you guys know, we're doing our price prediction on Bitcoin. I expect some of us to go low, some of us to go high, because we're kind of sitting in a boat right now where I think we could dip back down to 30,000, 29,000 potentially, as we discussed on the show the other day.
Yeah,
but if the Fed comes back with really positive news and says, you know what, we're going to make this news that might be temporary or might be in the long term bad because we're going to keep interest rates low, but it's short term good for not only crypto, but also for the stock market. We're going to talk about that a little bit later, but there's a lot that's in play here in the next 24 to 30 hours of what's going to happen, not only in crypto, but in the finance market as a whole.
Well, I'd say that right now, Bitcoin is in a very suggestible position. It's almost like, okay, bullish news, boom, it's going to rally. All the bulls are going to get excited. The bears, you have bad news, the bears are going to say, okay, I'm going to dump it. I feel like Bitcoin right now is in a very volatile position, which is funny to say about Bitcoin because Bitcoin's always relatively volatile. But I really feel that it's in a position where it's very suggestible, and if there's going to be some bearish news, it might take it very bearish. And if there's going to be bullish news, it might take it very bullish. But let's go ahead and take a look at some candlestick analysis here. On the daily chart, there's 3 different things I want to point out to you. Number one, we did not have bullish engulfing we did not have a bullish engulfing candlestick formation on the 22nd and 23rd of January. What essentially that would be is that this green candlestick would be larger than the red one, which would indicate to me that the bulls had set a pretty strong bottom. Instead, the bulls did not manage to recover above the open price of January 22nd's candle. On top of that, we did see a hammer formation. That's a bit of a bottoming pattern. That's a good one. This wick is a little bit longer for a hammer formation than I would like, but it is technically a hammer formation. And then we also see that there is a spinning top coming in right now. So we had this say that it's bearish. We had this say that it's bullish, and we have the spinning top saying I don't know. So I'm gonna cancel out the bullish and the bearish
Jebb,
and just say
I have a question for you here, though.
Go for it.
Oh, how would you sort of look at when you're looking at this with the hammer candle? If you actually look at the 12-hour chart, the 12-hour chart actually had bullish engulfing candle.
It does.
So it seems like it's a bit of a, in a way, kind of a little bit indecisive between bullish, but then on the other, on the daily you have you don't have the engulfing, but you have the hammer. But then if you go to the 3-day,
I was about to say
the 3-day, you also have a hammer, which is
and then you have a spinning top.
Yeah, I think those with the hammer on the daily and then the bullish engulfing on the 12-hour kind of supports at least a little bit of the market leaning on the
I think that's what I was going to say. I think it's more bullish than bearish, but there's still a lot of indecision in the market right now.
I think there's a lot of indecision, but what we're seeing is the charts reflect that traders and the psychology of the investor and trader right now is, hey guys, there is hope that we move to the upside. Yeah. It's not finally decided yet. We need to see what happens, but there's hope.
It's like instead of it being a stalemate like it was 2 weeks ago, it's a battle. Like there's actual conflict going on right now. I want to be careful with the words I choose because YouTube doesn't like you talking about that. But right now there's a proper battle going on. It's not just a stalemate like, okay, we're just going to sit here and be bored. I guess nobody's moved in the last 2 months. No, it's we are actively fighting over $36,000. That's why we put in the title, we're fighting over $36,000. There is a fight going on right now, the fight to the upside or fight to the downside. And as he said, on the 12-hourly chart, there is a bullish engulfing candlestick formation. And on the 3-daily chart, there is a hammer formation. But then on the 3-daily chart, you have an indecision. So I would say what the candlestick analysis is telling us is pretty much the same thing that this falling wedge that we're about to talk about is telling us, and that is that we have a slight bullish tendency right now. You can even see with this falling wedge telling us that we should be breaking to the upside, but at the end of the day, we are still very indecisive, and until the bears are proven wrong, they are still the faction that's in charge. So I want you guys to remember that until Bitcoin, in my opinion, gets above $43,000, we are still in a confirmed downtrend, and we need to make sure that we are leaning on that because the trend is your friend until it ends, even if you don't like the the trend. Betting on the trend is generally the best idea. And right now we are in a downtrend, and we have been for the last month and a half and change. And I think that that's going to end relatively soon, but it hasn't yet. Now, I do also want to show you Lux Algo, because Lux Algo is a very, very powerful indicator, one that I love. And right now it is showing us some interesting things. Down here on the 4-hourly chart, we have seen something pretty cool come into play. We have seen that there has been a buy signal. Let's take a look at this. There's a buy signal, trend catcher turned green, and Lux oscillator turned green. Now, before I even do any analysis on this, I want to remind you, technical analysis is not a perfect science. No technical indicator is perfect. There are times where a technical indicator is going to tell you something, and then it doesn't happen. Lux Algo never claimed to be 100% accurate. I personally don't know if I agree with this buy signal right now. I thought that this one might come into play and we'd have a rally. The fundamentals just weren't there. The technicals just weren't there. The on-chain is there. The fundamentals are there, excuse me, but the price just wasn't there. The sentiment wasn't there. Right now, we do have a buy signal. We do have a green trend catcher, and we do have Lux oscillator. At this point, I'm going to believe it when I see it. I love Lux Algo, but right now I am going to hold off a little bit. I'm not going to put too much stock in that. For example, we don't have any of the three bullish indicators on 8-hour. 8-hourly chart shows us trend catchers red, no buy signal, no Lux oscillator green. On 6-hourly chart, yes, we're green down here, but the 6-hourly chart only has the buy signal. It doesn't have the trend catcher. And of course, nothing has shown up as of yet on the daily chart, even back a week and a half ago when we first saw it. So I'm going to hold off on listening to Lux Algo, because the thing you need, or no, excuse me, I'm not going to hold off on listening to Lux Algo. I'm going to make sure I'm putting in the right context, because a 4-hourly chart buy signal does not mean that we're going to rally to $65,000. A daily chart buy signal is trying to tell us that, but a 4-hourly chart buy signal is trying to tell us, okay, we might rally for the next, 30, 40, 50 candles, but it's not necessarily saying, okay, we're about to go into a massive uptrend. So let's not say that just because there's a strong buy signal on the 4-hourly chart that means that it's trying to tell us that we're going to be out of the entire downtrend. No, that's the purpose of Lux Algo buy signals on the daily chart. So I would just caution you to remember that when you're using Lux Algo or any technical indicator, be very careful to keep it in its context, because if you're using I'll take it to an extreme. If you're using a technical indicator like, let's say, bullish RSI divergence on the 5-minute chart, and you're trying to say, okay, well, I see bullish RSI divergence here, it means we're going into a bull market for the next 2 years, you're not using that bullish RSI divergence in its proper context. So Lux Algo's proper context right now is 4-hourly. And 4-hourly chart, I think there is an argument to be made that we're going to have a small uptrend over the next 3 to 5 days. By the way, guys, if you love Lux Algo and you've been watching us use it for a while, you should definitely sign up for it. It's a phenomenal technical indicator, and I think it's actually pretty accurate on the 4-hourly chart right now. I think we're going to see some bullishness down on the 4-hourly chart, and it hasn't given us a bullish setup on the daily chart yet, but I think it's coming. If you want to sign up for Lux Algo, you will be glad you did. We've had thousands of our viewers sign up for it. Hit the link down below, sign up for it. You're going to be glad you did. Anyway, I am now going to throw it over to Kelly. Anything you see on Market Cypher, my friend, you let us know. And then we also want to hear some on-chain and market headlines from you.
Yeah, absolutely. The Market Cypher is quite indecisive, just like the Lux Algo shows. But the number one thing I will show is, if you're looking here, I'm on the daily chart on Bitcoin. This is starting. This is like, some people think this green dot is a buy signal, and I'm here to tell you specifically, a green dot is not a buy signal. A green dot is one of the many factors that you're going to need if you're using Market Cypher as an indicator to potentially set up a trade entry. This is just one of the many things that you're looking for. The momentum is starting to shift back up. You're going to want to see it come up, come back, have a smaller trigger wave. But then the other thing here is the VWAP is coming up, is crossing the 0 line. However, the money flow, while we barely, I'm talking by like minuscule decimal points, have just a very, very much smaller, higher low on the money flow in terms of how far the money flow came down. But in order to get a true trade setup on Market Cypher, we're going to want to get to this point to where this is starting to round out and really making a evident case that we're going to start having positive money flow above the 0 line. And then also that coupled with a strong VWAP move to the upside, RSIs in tandem moving up, and having the anchor wave and a trigger wave, at least one, if not 2 or 3 trigger waves, showing that the momentum is having higher lows throughout. But that being said, this is just like on Lux Algo, everything's a bit indecisive right now, along with the RSI, the MACDs, the momentum waves, the VWAP, the money flow. So really what we're waiting on this week is just to get some of this news to flesh out. I remember seeing somebody in chat corrected or expounded on when the release date will be. And he said that that news typically comes out an hour or two before the close of markets on the final day of the meeting. So I guess that means we can expect to get that report from the Fed or the FOMC tomorrow afternoon, sometime between, I would say, 3 and 5 o'clock Eastern Standard Time. That being said, jumping into the news, we've got some great news because there was a lot of money that was coming out of the market in the last, basically from December 21st onward, as the market was coming down. A lot of even some long-term holders, and some, not all, a small percentage of long-term holders, more specifically some whales, pulling out some decent amount of money from late December and very early January, and they're starting to scale it back in. Now, this story is actually more expounded on here with this story, where essentially there's been this specific wallet address, this transaction ID, has been accumulating Bitcoin every few hours. This other one, and I mean, I'm talking at like hundreds of millions of dollars in Bitcoin. This wallet here has gone from $0 in August 2021 to over $1 billion in Bitcoin now, and he's buying. This is 30 transactions per day, so that's even more than once an hour, which is incredible. That's starting to show that essentially big money and smart money is starting to make some moves on this price, because they feel like this is a good price to get in at. So this is a further expression of the market psychology, especially from smart money, showing that we're starting to build. We don't have it fully built. It's not a fully foundational support to springboard off of yet, but we're starting to build that foundation of true what's the word I'm looking for? Agreement that we're finding a local bottom. So that's incredible news. Another thing here, this is basically news along with CoinGlass. Glassnode. Glassnode is one of the on-chain metrics suppliers that you can get all the on-chain metrics for what's going on within the blockchain. And essentially, one of the things that they found is over basically 69% of circulating supply has now been dormant for over a year, increasing by 5% of circulating supply in the last 3 months. So that means long-term holders are still holding throughout all these dips, and they're basically really holding up this market because essentially, and if you're curious how they determine long-term holders versus short-term holders are classified as coins that have been held for less than 155 days. So if it's bought up until it passes 155 days, statistically, that's when they're at the highest ratio, or the highest statistical probability that it could be sold, because it's more likely that it's somebody that basically doesn't either have the smart money mind or is just a small money player. And the small-term holders, the short-term holders, are the ones that have been really unloading throughout these potential capitulations as we've been driving price down. And that's also shown here. I retweeted something from Glassnode, and this basically shows on the short-term holder new pool. And as you can see, as we get down to these levels where this dotted line is here, you can see that all these dips are right where there's basically been a local low, and even in this downtrend, it's still a local low for this until we get a new low. And in this case, this is where the May capitulation happened down to 29K, and this is exactly where the new pool went to, and we're basically flirting with those levels right now. So that doesn't mean, here's the deal with on-chain metrics. On-chain metrics aren't going to guarantee price direction or price activity, but what it does give you, it gives you some historical understanding and some sort of statistical basis to form your sort of plan of action, because all trading is understanding where things and how where things have been, how they've interacted with certain levels and certain sort of stimulus within that asset ecosystem. And based on those historical probabilities, then you can set up your probability for when you want your entry, when you want your exit. That's one of the reasons why we're so big on using the Fibonacci sequence for the retracements and extensions, because that's all based on not only historical probability, because you're seeing how the numbers are interacting not only with price and movement, but also when you're going on past price action and how that interacted with different levels on the Fibonacci. Gives you really excellent sort of understanding of at least a probability of where you can have the best and most profitable trades. The last thing we'll mention here, and this is incredible because this is one of the big stories that people were speculating was helping suppress some of the price, and that's that the Russian finance minister basically In surprising comments made by the Russian director of financial policy, Russia could be softening its stance towards crypto. Even Chebeskov, a director within the Ministry of Finance, has come out in support of regulating the cryptocurrency rather than banning it. Now, that's huge because, as you know, Russia is one of the largest economies in the world, as well as one of the most populous. And there's any sort of major player on the global stage like that, there's sort of regulations or bans on crypto. I mean, as you can see it with the 11th or 12th different China ban, every one of them still had drastic impact on the price. So the fact that this is all because the Russian central bank was proposing a blanket ban on his support in response to the Russian central bank proposing a blanket ban on crypto mining. And there was a lot of basically big money players and basically high people within the oligarchy, different parts of the economy there in Russia were very against this ban. And so they're looking more at doing regulation now, which is incredibly bullish in terms of, at least at minimum, taking off this major FUD story that's been stifling some of the price action.
Well, let's talk a little bit more about Russia, because obviously we're not a political channel, but there is an elephant in the room that we have to address. And there's obviously some turmoil going on in global financial markets as well as, you know, what's going on in Eastern Europe. Again, we're not a political channel, but we do need to mention that there is some instability in global financial markets. And Kelly, would you say that right now there is some turbulence that is affecting all markets, and that turbulence mainly coming from the conflict that's being talked about quite a bit over on the Russian-Ukrainian border might be having something to do with what's going on in Bitcoin? Could that be scaring people out of their Bitcoin positions?
Well, I think the fact is that in reality, Bitcoin is not a risk-on, risk-off asset. I won't say most, but a large majority of the very top players within the crypto ecosystem aren't either. I would argue that, at least at this point, many or most of the cryptocurrencies, crypto asset projects within the greater ecosystem could be more related to properly and by definition being risk-on, risk-off assets, because they're much more speculative, because they don't have proof of concept, proof of history, proof of, you know, all these things. But with Bitcoin, the fact of the matter is, especially with having all these new money players coming in, smart money, institutional money, they're still lumping it in with risk-on, risk-off assets. Right. So for the time being, and as I think we showed last week, the correlation between the traditional markets, the stock markets, and Bitcoin is still very, very heavily correlated. Yep. Now, yesterday, Bitcoin actually bounced back quite a bit before the NASDAQ ended up having its, you know, incredible recovery from its massive down day. But I do think it's going to take another, you know, anywhere from 3 to 8 years before we start to really see a consistent and sustained decoupling of you know, the crypto markets from the traditional markets. And right now, with the stuff going on in Russia, with the stuff going on with the Fed, with interest rates shouldn't have anything to do with Bitcoin, right? It's two completely uncorrelated things. However, the psychology is what we really need to work on decoupling. It's not the asset itself not being coupled or decoupled, but it's the fact of how it's considered. And over time, and as this project, as all, you know, many of these projects, Bitcoin, Ethereum, Cardano, Solana, Avalanche, all these top projects, as they continue to develop, and some of them fall out of this, I think the decoupling psychologically will start happening, and then from there we'll start seeing it play out on the price action and charts.
Well, I think, like you said, it has to do with the new money holders. We read a statistic on this show a couple of weeks ago that 70% of everybody in crypto got in the year of 2021, and you see that with the long-term holders. 60% now being in long-term holding positions indicates to me that we are seeing the illiquid supply increasing. That's what that metric means. But it also means that I think those people that have been in the cryptocurrency space in just the last 12 months are either, one, fudding out and leaving the market, or two, they're growing and learning how to become smart money. So I think we're seeing a maturation of the market, especially over the last 3 months, where we've seen a pretty major drop. People are either leaving the market, and that's causing the market to drop, or they're buying the market because they're turning into smart money. And gradually, as you see more and more of the weak hands get shaken out, you're going to see the market doing very well. And as you mature in cryptocurrency markets, you do realize that the metrics in the real world shouldn't have that big of an impact on Bitcoin, because it is a little bit in its own industry. It is in its own kind of bubble. But the other thing I'll say to that is that communication is not about what you say, it's about what they hear. So the Fed can say whatever they want, and we can say that, oh, well, we shouldn't care about what the stock market, or not that we shouldn't care, but the stock market shouldn't have this big of an impact, or what's going on with Russia shouldn't have this big of an impact. But at the end of the day, what matters is what the market hears and what the market does with that news. So if the market responds to it, then we have to look at that and say, okay, this is a powerful news story for Bitcoin. It shouldn't have anything to do with Bitcoin, but because the masses believe that it does, and they're making trades based off of it, we have to follow that market sentiment. And that's kind of what I've been looking at here. There isn't really any reason that the conflict on the Russian-Ukrainian border should have anything to do with Bitcoin, but the fear from traditional markets is pouring over into cryptocurrency, and it's stirring up a little bit of turmoil here in the space. Any final thoughts on that? Let's hear them, but we do need to go ahead and read some super chats. Cool. Let's do it.
Let's do it. We actually have a couple different things that I would love for you to look at on the chart real quick. So this was something brought to our attention yesterday on the show by Chris Davidson. So he added at me, this isn't a super chat, this is a question, but I think it's actually very helpful for people. And I'm going to preface this by saying it doesn't look good if this comes true. It's not a bullish sign for Bitcoin whatsoever. But I went back and did my back analysis, and I'm not going to lie, he's onto something. So I want you to answer this, Jebb. I'm about to ask a question, but is this something we should be paying attention to? And he was saying, look at the 50 weekly MA. So I looked at the SMA, I believe, for Bitcoin. What he was posing yesterday was every single time we cross below the 50 weekly SMA, we end up bouncing off the 200.
Okay.
So I went back and did back analysis on it. And sure enough, there's not a single time. There's one time we barely broke through the 50 and then came back up. So I kind of treated that as like, all right, we kind of used it for support, even though we technically went a little bit below it. But every time we cleanly break through bearish on the 50 weekly moving average, we end up actually bouncing off the 200. What are your thoughts about that, Jebb?
No, it's a good point. So here's what I'd say to that. The thing you have to keep in mind with this is that, yes, that's true. We're looking at it right here. Whenever you fall below it, you end up going and back testing the 200. The thing is, we don't have a very large data sample on this. We only have 3 examples. And the other thing to keep in mind here is that, so I'm not saying that we shouldn't pay attention to this, because we absolutely should. Because yes, we have broken below the 50 weekly, which is basically the 1-year moving average. We are now in a year-over-year loss, and that normally does not happen in bull markets. But I think we're also in a much different market right now than we ever have been. So there is value in comparing the current market to previous markets. We do that all the time, as historical analysis is very important. But as we talked about earlier, it has to be in its proper context. The proper context here is that, yes, Bitcoin rallied all the way to $65,000 and it got very overextended. But we have to ask ourselves the question, would it make sense for Bitcoin to go down to $20,000 based on the fundamentals? You know, if you asked that question before when Bitcoin was at $6,000, you might have said, no, I don't believe it made sense for it to go down to $3,000, but it did. You might have said, oh, well, it doesn't make sense for it to go down to $5,000, but it did. So what I would say to this is that we're in a very different market right now with very different fundamentals. And I will take this into account because this is very powerful and this is very interesting. And it does tell us, hey, look, we could see Bitcoin going down to $20,000, $21,000, $23,000. And I don't want to come here and tell you that that's not possible. It is very much possible. But I will also remind you that right now, Bitcoin is following through something very similar to what we saw happen on the S&P 500 back in the 2000s, where it went through a major double top over the course of the entire 2010s, and it bottomed out a little bit lower than where it started. So if we were to follow that same model, then we could see Bitcoin pull back maybe to $25,000, but then it would probably end up bouncing. And the final thing I'll say on that, because we're already looking at the stock market, is there's obviously been a whole hell of a lot of turmoil in the stock market recently. I mean, look at this, guys. It's crazy over here on this SDPR S&P 500 ETF. There's a lot of FUD in traditional markets, and that is having a big impact on Bitcoin that is outside of just the technicals. So as I said, don't take the technicals in a vacuum. Even right here, when we pulled back below the 50 and dropped down to the 200, this was a black swan event with the beginning of the news of virus thing that we cannot say. Back over here, the market was not developed yet. And back over here, yeah, Bitcoin probably did just need to go down to $3,000. So I'm not discounting it. It's very important. I'm going to think about it more. This is the first I'm hearing of it, but my initial reaction is let's make sure we look at this in its context.
Yeah, that was kind of my opinion, but I'm glad to hear it.
In addition to that, I think it's really important. A lot of people, they knock, especially, and I can understand where this sentiment's coming from. They knock lately, especially, you know, on my Twitter, you know, because I post so many on-chain metrics, and the truth is, on-chain metrics have been like disorientingly bullish in this entire drop. and the market still has been dropping. So what's that about? And in this case, as we're talking about the falling below the 50 SMA and touching down on the 200 SMA, well, one of the metrics that you just absolutely can't ignore, and it is the underpinning of any market anywhere, and that's supply. And the fact that we have basically the lowest illiquid supply basically nearly in any point in the history of Bitcoin, that's a metric that is not in anywhere, that's not even contended in the slightest at any point at all in any relation in any of those last drops below 50 and touching down on the 200. There was a lot more available to go around. So even with sell pressure, not only the sell pressure, there still was supply sitting on the sidelines. Now there's basically no supply sitting on the sidelines. Long-term holders are getting smarter and they're growing day by day. Every day we have a new, every day throughout the day, we get innumerable more Bitcoin that has been held longer than a year or longer than even 155 days. And so these metrics are growing by the minute, more bullish. And now price action will get pushed around, especially with all these big money players and smart players. However, there's only so far you could push it before the underlying support of the entire network and ecosystem just says this is, and that's essentially how you find a floor in any market.
Yeah, and here's the final thing I'll say on this, because this is a really good point, guys. If Bitcoin does have a boring quarter, extrapolate 3 months forward, we could see this moving average sitting at about $27,000. I could easily see Bitcoin going to $27,000. I'm not saying, to be clear, that that's going to happen, but it is in the cards. And the other thing that I'll say is that this 200 moving average, as of like this week, in the last month or so, has actually crossed the previous all-time high. So that tells us, because we have gone back and backtested this 3 times, that if we do go and backtest this, then we'll probably hold it, because that's what we've always done. And then that means that we'll probably never see a sub $20,000 Bitcoin again. So if we do go down to $20,000, which again, we would extrapolate this forward and it would probably be around $22,000 at the earliest that we could possibly dump down here. That would end up being such a massive capitulation event, and the fundamentals are so strong and the new users are so strong, and as he said, the illiquid supply is so strong, we would get so overextended to the downside that we would be screaming at the top of our lungs, buy, buy, buy. So if it does go down to $20,000, just remember, when in doubt, zoom out. The trend is up and to the right over time. And look, if we go through a year of a bear market here and this starts into a bear market, which, hey, I'm not telling you it's impossible. It could happen. I don't think it's going to happen, but it is in the cards, and it is seemingly a little bit more likely as of the last 2 weeks. If that occurs, take that as a benefit. That's what I told you at the beginning of our Bitcoin technical analysis segment. When I got into crypto and a bear market started, I was so thankful a couple years later that that happened. I was so thankful that my first year in Bitcoin was a bear market, not a bull market. That was a blessing in disguise. I've been in crypto almost 5 years now, and I am so very thankful that my first year was a bear market, because one, I learned how to trade in a bear market and make money in a bear market, and I realized you can make money in a bear market almost as easily as you can make money in a bull market. And two, I learned the value of patience and mindset. That's why you guys hear me talk so much about mindset rather than buy a 100x moon coin or an altcoin, because that's not what makes you rich. That's what might make you rich if you get lucky in a bull market, but what will truly make you wealthy is when you have to figure out how to make money in a downtrend. That's really the test. So if you can make money in a bear market, you can definitely make money in a bull market. So that's my thoughts on that. Definitely a little long-winded. Yeah, let's keep going.
But I'm going to answer. We're going to do one more, because it's going to be another discussion, and we are going to get all these super chats read before the end of the show. However, Alan Carey, who's a member, so he donated and gave. So I'm gonna paraphrase what he said, because I want to keep it from getting a little too far political, but it's political in nature. But I think it's a good question. So can you discuss why inflation is seen as good from politicians' position, regardless of the elections coming up? So just to preface this, there are politicians who believe that inflation is actually a really good thing. And then, we've discussed potentially is the reason why the Fed's going to end up deciding to keep interest rates low and to continue to inflate the dollar is so that they can win their reelection. He's saying, let's say that that's not going to happen. Let's say that they're not worried about their elections. An election is not an issue. Why would anyone use the argument that inflation is good?
Yeah, well, the reason that people use the argument that inflation is good is one of two reasons. Either one, malice, or two, stupidity, because it's not a good idea. I don't want to attribute malice where I can attribute something to stupidity or something to ignorance or something to, just not understanding the way the economy works. Because just because someone's a politician does not mean that they're an economist. In fact, far from it. Most politicians have no idea how the economy works, but they want to come and tell entrepreneurs like us how we should run our businesses. That's a pet peeve of mine. But the main reason that they are so interested in inflation is, one, because we've built a system over the last 100 years where we have to inflate the US dollar to maintain the national budget. We have trillions of dollars being spent every single year, and we're running a massive deficit, and we're in a massive amount of national debt, mainly to ourselves. And because of that, we have to keep doing this. It's almost like, let's say you have a wound. Let's say you have a bullet wound, and you put a bandage over it. You put a Band-Aid over it, and then you're like, okay, well, that didn't do good enough. I really am still in pain. So instead of taking the bandage off and doing the painful thing and going in there and doing surgery on it, you say, okay, I'm gonna put another Band-Aid over it. And then it gets painful and it does this thing. And then you say, okay, instead of taking those two bandages off and fixing it, I'm just gonna put another Band-Aid over it. That's what the Federal Reserve does every time they print money. They say, okay, instead of fixing the problem and allowing for us to go through a 2 or 3 year recession as we restructure the way the dollar works and we stop playing with this inflation game and we put ourselves in a position of a budget surplus, unless we do that, they have to keep inflating the dollar. They don't have a choice. Jerome Powell's in a very awkward position right now because I genuinely think he doesn't want to see inflation hurt Americans. I don't think he does. I'm not going to attribute malice to him on that. I don't have a reason to do that. I do think that he's in a very unfortunate position where he really doesn't have a choice. To keep the economy moving, they have to inflate the dollar. And that's the scary thing, is that this train has no brakes anymore. There are politicians that believe it's a good thing, but there are also a lot of politicians that realize inflation is a bad thing, and they look at it as a necessary evil. And the way that the economy is set up now is that if you try and build the economy without inflation, you try to build the economy without a national deficit, budget deficit, the entire economy is going to undergo such a radical shift that it would put us into a major recession. And the problem is that we don't have the balls to do it on our own terms, because that's going to be unpopular and people are going to lose their re-election campaigns. So we're just going to have to keep kicking the can down the road until it happens on its own. And when it does happen on its own, you mark my words, it's going to be worse than if we had done it intentionally, but it will happen eventually, because you cannot inflate your currency forever, because eventually the temptation will get too great and you'll inflate the living hell out of it and you'll collapse your economy. It's happened to every single national currency in the history of mankind that lost its backing, and it will happen to the US dollar. I'm not saying it's going to happen this year. I'm not saying it's going to happen this decade. Hell, it might not even happen this century, but eventually it is going to happen, and we are going to feel those effects.
Yeah. Hey, you want me to read any more, or do you want to go ahead and move on?
Let's go ahead and move on, just because there's another Bitcoin chart I want to show you, and it actually plays very quickly into this. We're going to move on into this and then Ethereum, and we'll come back and check out the rest of those super chats. We do want to make sure we get all of those in. This right here is a chart called BTC over WM1NS. The ticker symbols to find this chart is actually in the description down below. Go and watch this chart. If you're on the 4-hourly chart or something, it's not going to load. You have to be on the daily chart, 3-day chart, weekly chart, something above the daily chart for this chart to load. And this chart might look familiar to you. You might look at it and say, okay, well, that looks like the Bitcoin chart. And then you might think, wait a minute, this is kind of weird. I actually remember I looked at this first this morning when Kelly showed it to me. I'm like, is this the Ethereum chart from like 2 years ago? No, this is Bitcoin's chart, except it's not scaled over the US dollars as of today. It's scaled over the M1 money supply. So M1 money supply, I'll go ahead and read from Investopedia what it is. M1 is the money supply that is composed of currency, demand deposits, or other liquid deposits, which includes savings deposit. M1 includes the most liquid portion of the money supply because it contains currencies and assets that either are or can quickly be converted to cash. However, near money and near money, which fall over M2 and M3, cannot be converted to currency as quickly. So something like real estate valuations would not be a part of this, but something like your checking account would be a part of this. M1 money supply has about doubled in the last 2 years, and the interesting thing here is that compared to the M1 money supply, Bitcoin has not actually reached all-time high that it set in December of 2017. It's actually, even at the recent local high, 40% retraced from that. So what I take this to mean is that compared to the value of the US dollar, Bitcoin is actually undervalued compared to where it was in 2017, which puts two things in perspective. One, it says, okay, we're probably closer to the bottom right now than we think we are. And two, it actually tells us, yeah, 2017 was really a blow off top. But the fact of the matter is, whenever you inflate the US dollar, it takes time for that inflation to take effect. It takes quite a bit of time, actually, for Bitcoin, for the US dollar to make its rounds all the way through the supply chains. You got to realize supply chain logistics, from mining iron ore to turning that into a component, which goes into a widget, that goes into a gadget, that goes into a part, that goes into a car. The entire supply chain of most of our economy nowadays is multiple years long. You'll have parts sitting in a factory for 2 or 3 years, and they are locked up in the value of however much it cost from 2 or 3 years ago. So the fact that the supply chain takes a long time to turn over itself, the supply chain cycles are measured in the span of years in some industries. That means that it takes time for inflation to be felt all around the economy. So when you inflate dollars today, it might be 2, 3, 4 years before you really feel those full effects. It might be 10 years before you feel those full effects. So we've inflated the dollar a lot in the last 2 years, and we still have not had that catch up with us. But as it does, it's going to drive more and more people towards Bitcoin. Kelly, you're the one that found this chart. So what are your thoughts on this chart? What do you think it's trying to tell us about where Bitcoin is right now in relation to the US dollar?
Well, interestingly, I don't remember when it was. I think it was sometime early last year. There was an article that came back from one of the analysts from Bloomberg, and he had made the case that he could see. And I'm not saying that I agree with this one way or another. It's just supporting this sort of conversation we're having. And he was talking about the potentiality at some point of Bitcoin being $1 billion, and everybody blew him out of the water. He said, you have to realize, I'm not saying that I'm seeing Bitcoin at $1 billion value based on the value of today's dollar. I'm seeing it based on the inflation scenario of the US dollar over the next 5 to 10 years. And what that means as Bitcoin's value goes up along with the devaluing of the dollar, then something like that could be possible. Now, where we're at right now, of course, I do think despite the chart that we're just looking at with the M1 money supply, I do think that the $69,000 Bitcoin, even against the inflation, is and was worth more than the $17,000, $18,000 Bitcoin in 2017. Because when you look at the value of the US dollar from that date till now, it hasn't divided by 3, right? So, but in terms of the underlying sort of fundamental value in terms of grander market structure and all those sorts of things. Yeah, I think that and this is one of the biggest cases for why Bitcoin is so incredibly important and incredibly valuable. And we speak about this on our Friday series that we have coming out every Friday. You have to go back on our channel and look for some of the past ones, the Why Bitcoin series. Excuse me. This is specifically why, because this is the only asset class in the history of the world that, as it gets mined, it's not like you can mine more within a limitation, but the cap supply is a finite amount, and therefore, as you mine it, every time it's mined, it becomes more valuable, and every time it's spent, it's transacting value in a way that's if I give you $100 today to buy something for you, great point, great example is the pizza. Years ago, the guy bought a pizza for 10,000 Bitcoin. Well, now if I bought pizza from you or a car for $10,000 or whatever it is, in 5 years, that $10,000 I gave you, if you leave it as the same currency I gave it to you in fiat currency, that value is less. Bitcoin is basically the only asset in history that over time is going to indefinitely going to go up exponentially, and that exponent is going to come down over time as the market becomes more stabilized. However, gold, for instance, has been rising, and everybody says, well, they would say what I just said was incorrect because gold value goes up over time. But if you look at the value in which it goes up over time, it is absolutely no contest for what Bitcoin has done and what it's going to continue to do at minimum for the next 140 years, if not longer.
And the other thing you got, and also the final thing I want to mention with this is that everything Kelly said was just right, was absolutely right. But I do also want to mention that there is a bit of a caveat to this chart, and it's this gap right here. This gap right here should make you pause and question what's going on. So if you go over to a website called FRED, Federal Reserve Economic Data, then you will actually be able to see the M1 money supply, and you'll see, oh my gosh, it jumped from 4,000 to 16,000. We printed a lot of money. No, actually what happened in May of 2020, the definition of M1 money changed, so it quadrupled. So you have to keep in mind that this chart, if not for that quadrupling, that we would probably be sitting at a higher level than we are right now. So this is a little bit corrupted. If we were able to go back and change this to one or the other definition, then we probably are sitting above that level. But even with that in mind, just take a look at what happened from 2010 to 2020. We saw we saw Federal Reserve Economic Data show us that the M1 money supply jumped from 1,674, that's in billions, so that's 1.6 trillion, all the way up in 2020, right before everything started, to 4,000. So it more than doubled in a decade. And then just ever since May of 2020, right after they redefined how it was calculated, it jumped from 16,000 all the way up to 20,000. So we've seen a massive increase in the M1 money supply. And the point is that even with the redefinition, we're probably still undervalued compared to what the M1 money supply has done, because it has increased quite sharply. But I did just want to add that caveat in there. Without that redefinition, this chart would probably be sitting right up here instead of right down there, but it does still tell us that the market is, in my opinion anyway, undervalued compared to the value of the dollar, as we've seen so much inflation. With that said, I do want to go ahead and move on to Ethereum here. I know a lot of you guys are very curious what's going on ETH, and I'm a big fan of Ethereum. I hold quite a bit of Ethereum, and the first thing that jumps out at me here right now, guys, is Fibonacci. You probably knew I was going to go here to start with. As you can see, we bottomed out here at $1,700 back in the 22nd of July, rallied all the way up to $5,000, and right now we're sitting on 0.786. That is a level that I think we're going to be able to, that we're going to try to hold, I should say. I'm going to reserve my judgments for just a little bit. But if we don't hold that, then yeah, we're probably going to go all the way back down to $1,700. We're just at that point where that's probably what's going to happen. But looking at some of our oscillators, we can also see that MACD is starting to roll, is trying to converge bullish over the last 24 hours. It is trying to converge bullish just a little bit, but it is still very bearish in general. And one of the things that was very encouraging before this drop was that we had a uptrend right here, and we had a downtrend right here, and that was bullish MACD divergence. Well, now that Ethereum has set a lower low below $2,700, I wish it was at $27,000. Now that it's done that, our bullish RSI and bullish MACD divergence argument is invalidated because we have seen the market drop quite a bit. But let's not forget that the RSI can be used for more than just divergences. It can also be used for overbought and oversold signals. And we are seeing that RSI is at the lowest right now that it has been since March of 2020. So let's see what Ethereum did after March of 2020. Remember, you think there's economic geopolitical turmoil in our markets right now? You probably remember March of 2020. It wasn't that long ago. I can almost guarantee you that you will agree with me that March of 2020 was more politically tumultuous and scary than the market we're currently in right now. Within 6 months of that drop and us pulling that far back below, down below 30 on the RSI, we had rallied 452%. If we were to do the same thing, then we would rally all the way up to $13,000 before August. Is that going to happen? That is not at all what I'm saying. I'm not saying we're going to go to $13,000 before August. I would have said that a month ago, but now my bullishness is definitely shaken, and a lot of those price predictions that I have been pushed back. I had been talking about 100K Bitcoin in quarter 1 and maybe on into the beginning of quarter 2. At this point, I'd be surprised if that happened. I think we are going to go through a much more prolonged, extended corrective movement, but I think it's going to be more akin to what we saw in 2019 with Bitcoin, where it wasn't really a bear market, but it wasn't really a bull market. It was kind of just a turtle market, as Smay calls it. I think that's what we're going to be entering and being in for a while now, and that's actually a very good thing because it will teach us patience and mindset, and it'll give us the ability to use our outside revenue sources to generate income and then invest in Bitcoin and crypto. So that's actually a very good thing. But as far as the longer term technicals are concerned, guys, up and to the right is the thing I want you to remember. This market is continuing to grow. Ethereum's continuing to grow, and Ethereum is still the #1 layer 1 in the entire cryptocurrency space, and it is unquestionably the most powerful layer 1 protocol for decentralized applications and smart contracts. And the final thing I'll say here, and I'll throw it to Tim if he has any thoughts, is that we're actually at the bottom of an ascending trading channel right now. We had a bottom back over here in March of 2021. 2 bottoms earlier on in the year in June and July of 2021, and right now we have pulled all the way back down to that the bottom of that trading channel at $2,200. So I think that is very encouraging, and that could signify that a bottom is coming in relatively soon. Tim, let's hear your thoughts on Ethereum, and then we're going to read the rest of those super chats.
You know, I'll just go with what I was talking about earlier with Bitcoin. There's a difference between, there's similarities between Ethereum and Bitcoin, as we all know. They tend to move similarly in price. The only difference is Ethereum did what Bitcoin didn't do, and that was after this little rally on the 4-hourly chart, it has set up bullish RSI divergence. If you're looking at peaks on the the 23rd around 1500 versus the peak we just had on the 24th around 1500, the price went down, but the RSI continued to go up.
Yep,
so
I'm showing on my screen.
I think that the significance of this is not very large. I think that Ethereum's going to move to the downside. Like I'm not even looking at it. I don't think there's a reason to go look at it. But I'm sure if you were to go look at Ethereum over Bitcoin, you're going to see the price go down a little bit, which means Bitcoin's going to gain some dominance away from it. But then what's going to happen is things are going to flip. Even though I like the 4-hourly chart, it's one of my favorite, like what I almost call middle charts. Like the hourly and down are just so quick. Things can change so fast. Daily charts, it takes a little bit to get going, especially when you move up to daily, especially when you move daily, 2 daily, 3 daily, weekly. 4-hourly chart is one, it's like, hey, this is giving me a great indication of what I should be expecting over the next 24, maybe even all the way up to 48 hours. And at this point, I just would not be surprised to see Ethereum potentially go to the downside more significantly than Bitcoin. I think Bitcoin's going to just kind of move sideways. I think Ethereum's going to move downward and sideways. But it's very weak stuff happening there. As a whole, as you said, Jebb, when you zoom out is where things are a little more interesting with Ethereum. One thing I will say before we move on, and I think this is something we talked about on the show when I was hosting last week. We might have touched on this briefly yesterday, but Jebb, I'm assuming when you did your Fibonacci retracement, you were using the linear Fibonacci, right? All right. So this is something that I've seen happen quite often. You know, we had that one time on the show where you and I were talking about completely different numbers. Yeah. There's been times where I'm talking about completely different numbers with Kelly, and then I've seen people in chat even say like, "Hey, what do you think about the Fibonacci?" And they'll say the number. And you know, I did some digging, Jebb, and I did some back analysis. There are times where the linear Fibonacci is very, very useful and shows significant levels, but there's also times where the logarithmic one is very key. And absolutely. I know that technical analysis as a whole, as we talk about in CT2A, is a metric that doesn't move the market, but helps tell us the psychology of how other investors and traders move things. So I thought it was interesting when I pulled up mine. I noticed I go back and forth. I'll constantly change between linear and log.
It's good to look at both. Yeah.
I'm on log, and just so you know, the 0.618 level is the level that we came below, and that we're currently using on the daily chart as strong resistance. Yep. But we do have that one wick. It didn't quite touch it, but it came down and touched the 0.786. Yep. What are your thoughts, and how would you help people walk through using Fibonacci?
Yeah, totally. So guys, what he's talking about, if you bring up Fibonacci, the way you get into Fibonacci settings is just go ahead and come in here, scroll all the way down under style, and change from fib levels based, turn this on if you want it to be based on log scale, and turn it all, keep it off if you want to be on linear, and on if you want to look at it on log. So I'll just go ahead and show you right now with it side by side. Right now, if you look at it based on log, then the bottom at 7.618 it's kind of hard to read there, but it's $2,144, and that's the bottom that we have seen that Ethereum has pulled back to. But even if you look at it on the linear chart, we're still seeing that it's giving us support, because it's actually, in this case, with the linear chart, showing us where we're getting support on the candle bodies. So depending on which one you look at the moment, it's showing us either the support for the candle bodies or the support for the candle wicks. But on the log, it's very interesting, because as he said, the 0.618 is actually serving as resistance. And the fact is, both of those are relatively bearish metrics. And normally, whenever you see the market go all the way to 7.86, you're normally going to see it go all the way. Normally, if you're going to see a positive reversal, a reversal back towards zero, wherever the trend started, then you're probably going to see that happen no later than 0.618. Oftentimes, when you pass 0.618 and you start going down to 7.86, you're normally going to go all the way. And that would indicate that Ethereum could pull all the way back to $1,700. And then that would also indicate over here on Bitcoin, which we've already talked about Bitcoin, but I'll mention this too. That would also indicate on Bitcoin that we would probably be going back to $28,000, $29,000, $30,000. And to be honest with you guys, at this point, that's very much in the cards. And there's a big part of me that thinks, yeah, we're going to pull back $1,750 on Ethereum and $30,000 on Bitcoin, just because we're so close to it. So what would you say to that, Tim?
I think there's a possibility. I just think that let's wait on that Fed news. It's so
the Fed news. You know,
someone just even commented like, what is your prediction? You think it's gonna be hawkish? You think it's gonna be dovish? I don't know. Like I think dovish, but I could easily, like, if it comes out hawkish, I'll be like, okay, that makes sense. And we'll probably, as you said, at least 30. Like, I think 30 is almost like a question of at least. I think 29, again, retouching the same bottoms we hit back in July. And then even, we talked about it yesterday, there are two different indicators showing that the price could potentially go down to 25, 26,000. I don't think it's going to happen, but guess what? I've been wrong before when I've said there's two possibilities. I think this is going to happen. The other thing ended up happening, but at least when that negative price action happened, like this price action down when we came down and touched 33, I remember sitting here with Kelly and Jebb and we talked about, okay, if this happens, we'll go down to 33. Yep. It happened. I didn't think it was going to happen, but I wasn't surprised by it.
Yeah, no, that's why I said, I was like, I forgot what I said. If we drop below 38, we're probably going to pull back down to 33 to 37, and that's where we are right now. We're in between 33 to 37. And at this point, if we see another major correction, there's nothing stopping us from going back to $30,000. And the other thing, I just got to be honest with you guys, right now, the sentiment in the market, and Tim, you tell me what you think. I feel like the sentiment in the market is a little bit less exuberant than it even was back in April and May, because we were coming out of that massive rally. There was still a lot of hype, and that helped us to recover. Right now, it doesn't really feel like all of that hype is still there. The fundamentals are there, but the fundamentals, the perception of the fundamentals is what truly drives price. The fundamentals can say whatever they want, but if people aren't buying, because they're not buying, but eventually they will. But would you say that we're in a similar position, or maybe a better or a worse position sentiment-wise than April?
I don't know exactly. I'm trying to make sure I'm hearing the way you asked that right, but like you're saying that people are even more discouraged now than they were back in July.
I think so, yes.
Okay, that's what I think too. I think when we talk about those phases, I loved what you came back from the conference talking about those different phases. I think that we're entering depression phase. I think we're in it, either we're in it or it's going to get worse. I think the Fed news, that's its own thing. We've said that over and over again, but I just want you guys need to know that is just massive. What happens in that Fed meeting
That's huge.
is going to be huge. But I do think people are kind of sitting in a spot right now of like they're just tired. They're exhausted. They're done being shook out. And what's funny is if you're a trader, I definitely understand. You're tired of thinking the price is about to go back way to the upside. But investors, I think it's funny when investors who are when they got in, they said this is my long term. I'm talking about the next 20 years, and they're getting tired of it. And it's like, the truth is this volatility, it shouldn't affect you one way or the other whatsoever. The price goes up, price goes down. But even things that we were looking at right there, we could change the metric. But looking at that chart talking about, remind me, M1
money supply. Bitcoin
right?
over M1 money supply, yeah.
So even if that wasn't perfect, what it should tell you, and it does not take looking at a chart to know this, is that every single day the US dollar is getting less and less valuable. 30, 40 years ago, people were buying houses for $50,000 to $100,000. Just so you guys know, this is something Taylor and I have been looking at to buy houses. I cannot find a decent looking house that I actually feel like I would want to own for less than $400,000.
Yeah.
But I remember the household that my parents bought, and it's a nice house, and I mean, I'm not saying it's like a mansion or anything, but it's a nice house. And I remember them complaining about the fact that it was like $150,000.
Yeah.
And I'm just like,
it's insane.
It is ridiculous what's happening to money. So to me, I'm like, it's almost low key depressing to know, man, if I didn't invest like 4 years ago, that money I should have invested then is not just the price that we're looking at right now on paper, but it's even more so. And then looking forward, I'm like, this is just to me screaming more. I don't care what people say. I don't care if the price goes down to 15,000. I don't care if it goes down to 8,000. That would put me completely in the red on my investment. Yeah. I want to get more of my US dollars, which is going into crapshoot more every single day. I want to get it into Satoshis so that I'm hedged against this fall.
And that's the evil thing about inflation is that it's a silent tax. You can put $100 under your bed and come back in 10 years and it'll only be worth 50, and they didn't even have to touch it and they stole the money from you. That's what inflation is. It is the biggest tax that you didn't agree to, and you don't agree to any of them, I guess, but at least you can leave the country. But even if you leave the country so that you're not under the U.S.'s tax policies and tax laws, you're still feeling the effects because the U.S. dollar underpins the entire global economy. So no matter where you live, you need to understand that that Bitcoin is not only the best answer, it is the only answer. Let's make that very clear. It is the only answer to this issue with inflation. And that's why you ought to buy some. If you want to answer the question, why Bitcoin? It's because there is no other answer to the biggest financial problem of our entire global economy right now. Bitcoin is the one and only solution that has a shot of fixing it or of being a place where you can store your money. Because even gold and silver are going to undergo a lot of inflation over the next 100 years with, space mining and with all the geopolitical things going on with them. Let's go ahead and read some super chats.
Well, I would say before that, and we noticed this yesterday, there's been an uptick. Smay has been on just killing it recently.
Yes, he has.
I want to hear Smay's thoughts about all of this, and I know chat wants to as well.
All right, well.
Also, I want to preface this, just so you guys know. For anyone who's been watching this show and thinks that Smay is just a goofy, silly clown, that is not true. He is ridiculously intelligent. He's one of the people who masks his intelligence with humor. But I want you guys to know, he tells jokes, listen to jokes and laugh. But when he speaks and he's being serious, he's not an idiot. Like, Smay is extremely intelligent. So I wanted to preface that.
Such a smart guy.
Move forward.
Wow, that really means a lot to me, Tim.
Yeah. It's true. It's true. You're a very smart guy, Smay.
That almost got me feeling a little something.
Smay, your brain is big, my friend.
Oh, thank you.
Your brain is big.
It's good to know I don't have a smooth brain.
No, you have a lot of wrinkles in your brain.
So I actually want to say because I love everything you guys have been saying, and I've been really diving into right now. Actually, lately I've been reading a lot, and I've been reading this biography on Teddy Roosevelt. And the thing about
smart people books.
I was reading about Teddy Roosevelt and some of the stuff like issues that he took really dearly. And what was really funny to me? We're talking Teddy Roosevelt. He was a president, around 1900 area. Those early, those first years of the 1900s, right? One of his things that he talked about a lot that he really hated was fiat currency.
Huh. Makes sense.
Imagine when you're like literally still on the gold standard, all this stuff, and he still was talking about how this money is not right. You know, it made me think about it. I was like, this has been something that people have been wrestling with for a very long time. And now we're so fortunate enough to live in the time where that solution has been born by some random guy named Satoshi Nakamoto. You know what I mean? Like, I think it's one of those things that I'm just so excited and happy to be in here in this era where cryptocurrency and Bitcoin is thriving. And to be honest with you guys, that's why I'm not too concerned about what's happening in these short-term volatility moments like we are in right now. Like you guys were saying about sentiment, it is one of those things that like I feel like people are dull to the news now. Mm-hmm. You know, it's kind of this numbness that is going to kind of dampen the effects of news stories. So it's going to take a lot more than what used to be able to send Bitcoin into a spiral. It's going to take a lot more than that now. And so that's one of those things that I'm really interested to hear what happens with the Fed here soon and so on. But I'm kind of in the camp of saying in the short term, I'm taking this opportunity to get rid of my nasty, filthy U.S. dollars and turn that into Bitcoin, turn that into Satoshis. I'm really looking forward to taking that opportunity. But to be honest with you guys, in the short term, look, I think this is probably going to be pretty boring. If not pretty boring, pretty uncomfortable for a while.
I felt like we could just hook like some cables up to the Rough Rider himself, and him spinning in his grave would solve all the world's energy problems, because he's absolutely right. The gold standard was still technically in effect. It was starting to be going. We were starting to go off the gold standard when Teddy Roosevelt was alive. That's such a good point, Smay. We also got George in the chat, by the way. Shout out to George, Cryptos R Us. Make sure to go subscribe to him.
George.
Also, are we doing stuff with him Thursday or Friday?
I have to check my calendar.
Yeah, we have to check.
Friday.
Is
it's coming out
Friday at 4, I'm pretty sure.
Yeah, we're doing something with George. It's going to be fun. George's a good guy.
Boom.
I love
Let's
George.
go ahead and read some subscribe.
Let's go through these super chats because we still have to do our price predictions as well. So we're gonna have to speed round these. So no long answers. But Matt C, who's been a member for 5 months as a Jebbi Grandmaster, said, "Just wanted you all to know how much we appreciate you being here every day, providing us with critically important information, so that we can learn for our own how to navigate the crypto space. Much love." Absolutely, Matt C.
Much love, Matt C. Thank you so much, man. Really appreciate that.
Raymond this is a good one. Svoboda. With all the progress ADA has recently made, does the price have a chance to decouple from Bitcoin price action, or is ADA too heavily linked to Bitcoin price?
I think Cardano jumped to $50 billion in market capitalization because of its community, and now its fundamentals are catching up with it. So I do think it's going to have a very good year, so long as the entire crypto market doesn't go into a prolonged bear market. But I do think Cardano has a lot of hype that has been built into the price. So I think it's honestly, considering its and look, I love Cardano. I'm a huge fan of Cardano, but considering its entire ecosystem hasn't fully launched yet, I'm happy with its valuation at $1. Once it starts getting 20, 50, $100 billion in total value locked, then I'll start saying, okay, maybe it should be up at $2, $3, $4, $5, $6, $7, $8. But right now, I'm comfortable with it at $1. I think it's fairly priced at the moment. But I do know that there's a lot of development coming towards it, and once it does, it's going to help that market to rally quite a bit.
I'm pretty excited for ADAX and what
I am too.
ADAX
I'm
does.
extremely excited for ADAX.
Let's keep moving on though. Crypto Sam said we need a huge volume move either up or down to change the market. Even though we are in a downtrend, the volume is low. Do you agree? What are your thoughts?
I agree. I think we're going to see a major capitulation candle, or we're going to the downside, or we're going to see a major news story come in and it's going to cause a giant short squeeze that'll cause a major rally. It's going to, if we go through a prolonged growth phase like that, then we're probably going to see that's going to take quite a long time. If we're going to like level out and just start rallying, that would be what the end of a bear market would look like. I think we will probably see a pretty big movement that'll end where we are right now.
Sweet. We have like, I think 6 more maybe. Jebb, you said that using lines over candles is never beneficial in CT2A. Does that apply still when using it to locate bull and bearish RSI divergence?
I would have to...
I don't remember you saying that.
You have to remember... I'd have to look at the video and what I said in context. I don't remember exactly what I said because some of these videos were shot, a year plus ago. But the fact is, Here's the thing you need to keep in mind with candlesticks. If you're using the wicks, always use the wicks. If you're using the bodies, always use the bodies. Try not to mix them and use a wick here and a candle body there. If you're going to use one, use it everywhere. Just have consistency, and both of them will both work. But just look at both, but use both in consistency.
It is something, as in my knowledge of doing CT2A with Jebb and also doing my own, it is not a simple answer when it comes to wicks.
It's really not.
But just to answer your question, I just want you to know how I do it, and I learned from Jebb, so this is how Jebb does as well. When we're doing bullish and bearish RSI divergence, we are doing candle body closes. So green candles, we do the top of the close. Red candles, we do the bottom of the close. Keep moving on. Elliot Locke said, media is all over the current conflicts in the world. Russia, Ukraine, China, Taiwan, and now Iran backed Houthi rebels hitting U.S. troops in UAE. If any of these pop off, what could we expect on the top of a Fed report tomorrow?
Uncertainty drives bearishness in every market, and it'll do the same thing in Bitcoin. But at the end of the day, none of those conflicts directly have an impact on Bitcoin. They do have an impact on sentiment, and sentiment is a very fickle thing. So it could cause a drop that could lead to dominoes falling over in the cryptocurrency space, but ultimately, unless something huge happens that has a major impact on the global economy, as unfortunate as it would be, its impact on Bitcoin actually would probably be smaller than you'd think in the long term. In the short term, it could cause like a 15% drop in a day, but in the long term, probably wouldn't have that big of an impact.
The Bitcoinologist that I saw in articles, I think someone mentioned this yesterday too. I saw an article saying the current administration is close to releasing an executive order on cryptocurrency. Sounds scary. Did you hear about this?
I'd have to look into that more before I answer that. There's been talks about that for a while. The thing is, the current administration has a lot more pressing things to worry about than cryptocurrency. That's why we're still struggling with crypto regulation, because there's midterm elections coming up and this whole, economic thing going on. So we might see that happen, but I'd be surprised to see a lot of attention coming in the direction of crypto over the next 12 months, coming from the executive branch anyway, not necessarily Congress.
Tom Wilkes said, in my opinion, TA on the USDs that I buy, by working every day, looking much more frightening than TA on the crypto I buy.
Yeah, for real.
Maybe a ridiculous analogy, but it makes me much less concerned about these dips.
Yeah, no, I totally agree with you. If you're worried about Bitcoin, you ain't seen nothing. Yeah, look at the US dollar. Like if you want to look at it as a lesser of two evils thing, I don't think Bitcoin's evil. I think it's a very good thing. But if you want to look at it like that, Bitcoin dropping 50%, have you seen the US dollar and the money supply charts?
Yeah, last two here, and these. Fran just wanted to donate. It looks like €5.
Fran actually sent in a comment right after that.
Did you catch it?
Yeah. She added me. It said, "Can you comment on the controversy between Sunday Swap and CardStarter and what that might mean for the ADAX launch this week?" And that essentially, Charles Hoskinson actually addressed this yesterday. He put out like a 5 or 10 minute video addressing this exact thing. Essentially, there was a massive disagreement between Sunday Swap and CardStarter. A lot of people had invested in CardStarter thinking that it was going to be included on the Sunday Swap launch, and there's going to be liquidity and rewards that are paid out, and then that whole thing fell through. And Charles Hoskinson came out brilliantly, and because everybody's asking him to fix this, and he's like, essentially he addressed it right on. He said, you know what, at the end of the day, this is a decentralized ecosystem, and this is one of the things that us investors and us traders, we need to require from the projects that we're doing our due diligence on, and we need to require them to have different methods of arbitration for disputes like this built into their promises, as we're looking into that, and how this would affect ADAX. Well, ADAX is a completely separate project, and on the flip side of this whole controversy with Sunday Swap and CardStarter, ADAX is, I think they're about to, if I'm not mistaken, scrolling through all the different tweets and telegrams and stuff, they have a massive full report on a full transparency, audit that they had been working through the last few months, and that report should be coming out, and the launch is this Sunday. And we've all been kind of scaling in over the period of time. It's still at an incredible buy point, and I would say for anybody looking to get in ahead of a launch, there's always a bunch of marketing that usually leads up to a launch. So I'm just curious when or if that's going to happen. And I don't think the CardStarter Sunday Swap thing is going to do anything except for bolster ADAX because of its transparency and honesty, and when we see its full use, it's going to be amazing.
Cool.
Last one we have here. Chris Davidson just thanked me for asking that question from yesterday about the weekly chart. That's all we have for Super Chats, and I know we are running very long, but Tuesdays is the day we do our price predictions. So, Kelly, I'm going to let you start because you said that you have yours already. I have Smay's, but I don't have Jebb's or yours, and I have my own, obviously, already written down. But Kelly, what is your prediction for Friday at 9:30? What Bitcoin will look like? And just to preface for everybody, these are not financial advice predictions. These are for a game for the HODL Trophy. And this week, more than maybe any other week of the prediction, is going to be probably the most. I don't think any of us are 100% certain of these prices because of what's going to happen here in roughly 24 to 30 hours from now.
Mm-hmm.
But
I honestly feel like the best method right now would be to roll a 12-sided die with 12 different numbers.
For real, I know.
That is honestly
there's so much uncertainty.
I'll stick with my bullish bias based on all the bullishness that I post based on reading all the on-chain metrics. And I'm going to say even just a conservative bullish bias from here. I'm going to say 42,367.
Oh, really?
I expected Kelly to go high. But
here's my reason. If we don't get negative news, say the news is
let's say the news is good.
The report is even just neutral. I think the neutral would actually, if it's not above where people were expecting, that's going to be bullish. If it's below where people expected or delayed, then I think that's going to be ultra bullish. You know what I mean? If we just moved up, we dipped down almost $4,000 yesterday and came back in the same day. I don't think it's out of the question that we could rise a few $1,000 from here. So I'm going to say 42,367, and I still think we could still touch the 30K area. So I'm going to. That's my prediction though.
Jebb, what you got?
$33,250.
Oh, what the heck is my page? Okay, 33 what?
33,250. I think we're gonna hang out down here for a little bit.
33,250.
33,250. I'm 10 grand below you, Kelly. It's gonna be a crazy week, ain't it?
Yes,
let's put a little side bet on the side.
This might be the record for
whoever's
biggest
closer.
gap. Biggest gap.
It is a big
top
gap.
And bottom. I can tell you guys right now, Jebb, you are the lowest predictor, and Kelly, you are the highest predictor.
Hey,
so
I'm okay with that.
That is our range.
I'm okay with that. I want to be the lowest predictor this week. I think it's going to be bearish.
In 20 seconds or less, give your reason for that.
Because if you look on my chart, you can see that every other time that we've had a major capitulation event like this, we typically go into a period of basically a falling wedge. And I think we're about to see the same thing happen here, where we're going to have kind of this falling wedge thing, and then we'll have a decision point in the next week or two. But I think it's going to take a little bit of time to get there.
Gotcha. Smay, do you want to say your prediction? Or do you want me to read it for you?
I can say it.
Yeah, go for it.
So my prediction is 33,800.
Yep.
And I will say, Jebb, you got me a little nervous. I gotta be honest. You got me a little nervous.
I almost said 34,250. I'm so glad I went $1,000 lower.
You went lower.
But I picked that number because I gotta be honest with you. As much as I'm excited to hear what the Fed's gonna say, there's a sneaky part of me that I feel like it's not gonna have that big of an effect, or people are just people are still just out of it, dude. Like I feel like there are people that are just not even tuned in right now. And there's just money that's not being tuned in.
Let's keep moving here. Because
last one. So mine is 39,500. So this is residing that the news is gonna be dovish. I said before, I don't know, but I think it's gonna be dovish. And this continues with my thought of we set up that bullish RSI divergence on the hourly chart to set up our bullish RSI divergence on the 4-hourly chart. But what's going to happen is we're going to need to set up that bearish RSI divergence, come down so we get bullish on the daily. That 39.5, because it was such a key level of support before, I think that we're going to get back to that region. We're going to come back to the downside having formed bearish RSI divergence, come back down potentially all the way back to 35, 34 before we see bullish divergence on the daily, and that's when I think we're going to see a spring. But it's we'll see. We got to wait to find out the news first. So.
Well, guys, if you enjoyed today's show, make sure to smash that like button. Let's see if we can get to 1,300 likes here in the next couple of minutes. Thank you guys so very much for tuning in. Drop a hashtag FinSolve in chat. It is our vision here to see you achieve financial sovereignty, and that means you having control over your money and your financial instruments rather than your money and your financial instruments having control over you. You are the one that should be in charge of your finances, not the other way around. That's what we stand for, because we want you to be able to live a purpose-driven life, and we want you to have the financial sovereignty over your life to be able to do that. If you agree with that vision and that mission, smash that subscribe button. I would love to see you every single day here in chat with all of our good friends. Thank you so very much to our members. Make sure to check out iTrust Capital, linked in the description box down below, and make sure to sign up for Lux Algo. It's my favorite technical indicator that I've used to date, and you can find both of those links in the description box down below. Before we go though, guys, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good